Welcome back. We are diving straight in, no warm up, no stretching, because this first conversation tonight is one that affects every single person listening right now. Whether you are employed, self employed, hustling on the side, or simply trying to make ends meet. SARS is watching, and you know very well, right? South African Revenue Services is watching, and they are watching closely, like a hawk. Now, look, most of us have a very simple relationship with tax. We see it deducted from our payslip, situge, we shrug, we move on. It's fine. Maybe we file a return, maybe we don't. Maybe we think, oh well, Mina, I earn below the threshold, I'm fine. Maybe we accepted that auto assessment which was sent by SARS to us without even reading it properly. Sound familiar? Because if it does, tonight's guest has a message for you, and it starts with the words, be careful. Be careful. With the 2026 tax season opening on the 1st of July, 2026, that is literally in few days away. Tonight is the 23rd, so basically in 7 days. 7 days. We are joined by a man who lives and breathes financial planning and knows exactly where ordinary South Africans are slipping up when it comes to their tax obligations. He is a financial planner, a certified financial planner, I must add, sharp, experienced, and tonight he is in our corner. Stian De Witt, good evening and welcome to It's All About the Money, sir.
Good evening, Santa, to you and your listeners.
Stian, welcome to the show. Glad to have you with us tonight. So let's not waste any time because I feel like South Africans genuinely don't know how many tax traps are sitting right under their feet. With the AI these days, it's even worse. So let's start. Many South Africans, Stian, still believe that if they earn below the tax threshold, they don't need to worry about SARS at all. Help us understand this. How accurate is that assumption in today's tax environment? And is that thinking actually dangerous?
It's a slippery slope if you are, let's say, below the tax threshold or on the brink of it. One of the things that where we see this actually happen is with two-pot, where SARS says on two-pot, if you, for instance, take a claim on your two-pot withdrawal every year, you will be taxed at your marginal tax rate. Now, there's a difference between your average and your marginal tax rate. The marginal tax rate is the higher of the two. So, for instance, then you will be charged at least 18% tax. So, this is a major challenge because you're not getting the tax benefit if you're below the tax threshold, and let's say you pay money towards a pension or provident fund, but you will be taxed. And sometimes some of the companies, unfortunately, especially in the beginning when two-pot came about, didn't actually deduct your tax properly. And then now SARS comes and says, no, I'm going to come for you. I need my money.
Sure. Well, there you have it. SARS is definitely going to come for you. So you've got to really put your ducks in the row. There's a saying that goes, in this life, only two things are certain: death and taxes. Now, we can't help you with the first one, but tonight we are absolutely going to tackle the second one head on. It is Personal Finance Tuesday, and the taxman, SARS is not sleeping. In fact, SARS has been upgrading. They've been evolving. They're getting smarter. And while they've been doing all of that, many of us have been going about our lives thinking, oh, they will never find me. Well, 2026 season opens up on the 1st of July, 2026. That is like 7 days away, people. And whether you are earning a salary or a side hustler, a landlord collecting rent, or someone who dipped into their two-pot retirement savings thinking it was free money, tonight's conversation is hitting different. Now, back to you as TN. You know what? I love this conversation already because you are basically telling South Africans that SARS knows more about you than your own family does. And that is not a joke, is it?
That's so true. Some people, we are using ChatGPT and different AI versions. SARS has a long gone been using that. Now, one of the things that SARS do, and unfortunately this is SARS stance on things, they go and say, you know what? I see what's happening in your bank account. They do lifestyle audits. They can actually have access. They can access your bank accounts. So they can see what's going on. And let's say, for instance, you have a side hustle and you're still below the tax threshold. They're going to go and say, okay, this money coming in, I'm going to start taking some of this money. And then they come to you and say, you must prove me wrong. I'm taking the money, prove me wrong. And unfortunately, we've seen that many a times where they actually just go and take money out of people's bank accounts and then go and say, now you have to object. Now you have to get experts to come and help you. And then you are stuck, because if you do not have your slips and your and all the necessary evidence to prove the contrary, they just say, sorry, I'm taking your money. You need to prove me wrong.
Yeah, well, speaking of which, let's talk about the auto assessment trap. SARS has been rolling out these auto assessments. They basically do your tax return for you and send it to you saying, here it is, just accept it. And honestly, for a lot of us, a lot of people, that sounds like a blessing, right? Because it seems like it's an easy thing. Now, Stian, help us understand, how risky is it to simply hit that accept button without scrutinizing what SARS has actually put in that auto assessment? What are the biggest dangers hiding in there?
Remember, SARS only takes what they can see. For instance, let's say you have exceptional medical expenses, or you might have a disabled child or someone in your family and that's just one example where you have expenses that you've expended and SARS doesn't see those expenses. Now, they're not going to report on that and reflect that. So if you just accept your auto assessment, a lot of your expenses that you might be able to claim from a deduction and get a reduced tax, especially when people get refunds, they are very, very happy to get a refund, but they don't understand they might actually be able to get a higher refund if they just take the time and have a look and maybe just talk to someone that's maybe going to charge them a few $100, but they might be able to get thousands back if they just take the time and not say, okay, I only accept this.